have 12 minutes to go through actual costs. The good thing we can play a lot of good foundation. Okay, so pivot to actual costs. So where we stand today on actual costs is every time we post a transaction to Dynamics, a cost is being brought back into Vicinity. So take a raw material, for example. I consume raw material, it goes to Dynamics, Dynamics posts it, and brings a cost back to Vicinity. That's the relationship that we have with Dynamics. So if I pull up a batch ticket for a minute, what I'm talking about is in the transactions section. See if I've got anything with a little more excitement. Transactions. Surely I do. We can get creative. Okay. So what I've got here now is in the transactions section. So as I'm entering transactions in the batch ticket, we're not going to go through batch entry here, but we consume raw materials and put finished goods on hand here. As I tell it that I'm consuming raw materials, it's creating these transactions. Whether I post it or not, these transactions are here. So as soon as I enter a quantity in the issue now column up in the procedure section, a transaction is created. And when I post, what happens is we make a round trip to Dynamics. So in this case, we take the raw material and we send it to inventory. Inventory does its thing and posts it and brings us back the cost. Honestly, we could care less how it posts it. That's inventory's problem on what the valuation method is, what cost it uses, et cetera, and so on. It does its post. And I say that because we don't control that post intentionally, because it's actually a fairly complex post with lots of tentacles everywhere, and we'd much rather have Dynamics handle that. So it's somewhat black box-ish in the respect that we send the transaction, we call the post, and then we await a response. When that response comes back, we're picking up a few things. Most notably, we're picking up a unit cost. So that inventory transaction posted at a certain value, and we're handing it back into the batch, and we link it back to the Dynamics document number. I happen to be integrated to GP right now. So that's a GP document number that I've linked to. And I can go back and forth to GP and I'd be able to see those same costs, et cetera, and so on. So the costs are being brought into the batch. And then it's Vicinity's responsibility when we put something on hand. Our part of the contract is when we hand a cost back, it's our responsibility to provide a cost. No matter what the costing method is, that's our responsibility. And Dynamics will do whatever the financial system is set up to do with that. So if it's actual cost, it will take that dollar and post it as an adjustment, so to speak, or in Solomon terms in a receipt. And so we're responsible for providing that cost. At a high level, what a lot of clients do is they post all their raw materials, assuming actual cost in this conversation. They post all their raw materials, and then when they've got all their finished goods ready to go, they post their finished goods. That's typical. It causes some challenges when you start market data collecting finished goods coming out of the line. Because let's say that let's assume for a minute I've consumed all my raw materials. I should assume that for a second. I've scanned it, I've posted it, and whatever. I've got $100 of cost, and now I'm putting finished goods on hand. And if I'm barcoding, I'm probably going to put part of the finished goods on hand because I've got a pallet. And I've filled a pallet and I want to get it on hand. Because that's the efficient way to do that with barcode data collection. I would scan it. As soon as I scan it, Vicinity's responsibility is sending the Dynamics down the cost. For the accountants in the room, it probably becomes pretty obvious. Until you know the actual finished goods coming out, you can't really calculate a cost of that item because your yields are going to be different. So you can do the best that you can do. So we have the ability to do a prorated cost. In other words, we can say you're putting a pallet on hand that represents, let's say hypothetically 10% of what I expect to get out, this one pallet does. So we'll take 10% of that cost and apply it. That's the best you can do. And then at the end of the batch, we'll settle things up. Which gets to the conversation for tomorrow that we'll be talking about. Today, what we do is that cost, that under allocated cost, is sitting in your production query account. It's actually when you close the dollars, it can go to the GL account. But it's not going, the point is, it's not going and revaluing the finished goods that you put on hand. That's the point I'm trying to make. We're not that sophisticated, at least until coming up. It's in my opinion, GP is leading the charge right now, but I imagine that NAV will be right behind it in SL. But we are now able to call some utilities, an adjust cost utility that has existed in GP forever. NAV's got it, and SL's got it, and you can go take a cost layer and adjust it. You can do that today in GP's inventory, and then we're going to be using that tool to do that. So when you put a finished good on hand, and we put it on hand at $10 a unit, but at the end of the batch we calculated it at $9 a unit, we're going to go back when the ops close the batch, and if those layers still there, if you haven't sold it, used it, whatever, we will adjust that cost layer from $10 to $9, and the GL will go to the appropriate place.
But if you do sell it, it's the cost of goods.
Cost of goods. For your purposes, I can speak kind of code. We're going to be using the adjust cost functionality as out of the box. We're calling their adjust cost functionality. Okay, that's actually that's a big deal for us. That's big monumental move forward. In GP terms, that's GP 2015 for those interested. When NAV kind of exposes those same things, we'll do that there as well as with SL. So it's the right thing to do. It makes a lot of sense.
But the current system is you put all the pallets on at 10, and then we have an adjustment of $40 that hits something that is not those pallets.
That's right.
It just hits a
Cost of sales. Yep.
Gotcha.
All right, so that's that. Labor overhead gets applied and sent to the general ledger directly for SL and GP. It automatically goes to the general ledger. Solomon, you just do a journal entry at the end of the month for based on a report, and those are automatically part of that batch costs. So we talked about theoretical costs a lot. The actual is just applying that. When we talk about labor and overhead, like we enter actual quantities of inventory, we've got the same scenario for additional costs. So we're talking about actuals now on a batch ticket. I could actually come in and record the actual amount of time that I want to incur. So to Steve's point early on, do we backflush? Yes, we can backflush. In other words, this field can be populated automatically with the standard quantity. But you can also come in and put in whatever quantity you want to. In other words, we allow you to record actuals. This is where we happen to be on fermentation, which is a really good example for breweries. This is a scenario where we can say, don't worry about the word hours. Just think in terms of number of units. So this is the number of days that this was in a fermenter. So you could take a cost per unit for a long process and apply a certain amount of dollars or time associated with that. So this is where the issue now, just like a raw material, an issue now is where you can record the actuals. And the GL accounts we've already kind of talked about in the setup of the additional cost ID. For those truly interested, and I'll be happy to share this with you, here are the GL accounts associated with the costing, the actual costing. This is one transaction I'll talk about in a second. This is the second transaction, this is the third transaction, and that's a final transaction. So the first transaction is consuming raw materials. I've skipped the purchase, so I've done a PO receipt, it's already on hand. So I'm starting at the usage. So we're crediting the raw material control account, which is defined by Dynamics. So when you set up the inventory item, you're telling it what the GL account is associated with that inventory item. So I'm consuming $50, and we're putting it to what we call a production clearing account. It truly should be a zero balance account, as the name implies. Some people would call it a WIP account. That's okay with me. I think we even call it a WIP account on the screen, maybe. But it's a production clearing account. So we're going to, in this case, we're going to debit that account. And then the next transaction is applying labor, whether it be for a finished good or a formula, it doesn't really matter, either application method. We're going to debit or increase the production clearing account, and then we're going to hit an applied labor account or an offset account. Normally, this would not be the labor account itself. This is a contra account. A labor and expense account is typically a debit balance. So when you pay somebody, we credit cash and debit labor, which is what you're really seeing in this last transaction. This is an offset to that. So what I've done is, in effect, take labor cost of $12, and I've offset it by 10, leaving an unapplied labor of 2. That's the accounting behind it. So what we're talking about in this GL transaction is this, in my mind, is typically a balance sheet account. That can be argued, and I won't die on that hill, but I would say it's a balance sheet account. This is a contra expense account. I wouldn't put it to your overhead expense account or your labor expense account. I'd put it as another account in that same area. And this is your actual labor account that I was referring to. So the offset to this account is cash. Here's the last transaction, which is finished goods. Again, depending on the valuation method, we're assuming actual. So therefore, it's going to go and grab the total costs out of it and apply those costs. This assumption, by the way, is assuming I do the finished good after I get all my finished goods at one time and I do a shop. Questions coming, it looks like.
Yeah, I'm not an accountant, I'm an operating guy, so.
That's fair.
Any accountants forgive the question. Where's the other side of labor actual?
Yeah, I should have put cash up here. There should be a cash account.
Okay,
I
all right.
apologize. That would balance it. Yep. And arguably, I should have put the raw material on hand as well. But all right, any questions on that?
Why are we writing the labor action? I guess
We don't. We don't.
Okay, thank you.
That's why I'm not terrible. This is ADP. This is
Okay,
your
thank
payroll
you,
system.
thank you.
This is whatever.
Okay.
Yep. And
I'm like, what?
yeah, right. And I guess one of the reasons I put it here is that what we're not doing is we're not taking the invoice from a toller or a transaction from ADP and trying to integrate it with this. Our additional costs are based on standards, I think is the standard rate, I think it's fair to say. Actual quantities if you want, but standard rate.
So then, and if it's not for this session, please let me know. If at the batch entry you have an opportunity to enter actual times, how is that then calculating the actual labor? Is it based on a standard rate?
Yes,
Okay,
a standard dollar rate.
got it.
Yep,
That's on the labor, the additional cost.
that's exactly right. Yep. So we're not doing shift differentials or any of that kind of stuff. We're not getting that
But in theory,
complicated.
you could have a different labor code or.
You absolutely
set
could.
up for different departments or.
You're absolutely right. You can have as many of those as you want to manage. Yep. And then for those that are really into it, there's the standard cost. Why does that not balance? Oh, it's stuck in production clearing. That's why. So you can walk through that on your copious free time. These are the variances that we've added based on this scenario. So we come up with our variance calculations. 25. Yeah, good, it balances. Yeah, so this transaction, kind of hard to see. I probably should have made this red, but the 90 is, the 65 is what is being put on hand for the finished good, and then those are my variance accounts that get handled. This transaction that we're talking about happens at ops closed. So at the moment, this is out here because we don't know if you're going to add some more. And then when it closes, we handle this piece. Okay. We okay? Any questions on costing, theoretical or actual? No?